Welcome everyone to the Vested Interest channel. This is Shane back for a stock pick of the day video. In this video, we're going to take a look at Verizon. This is one in my portfolio, so will be a review of one I am holding. Now, this is the Vested Interest Stock Screener. This is the criteria we will be looking at. It isn't an initial screener, not a deep dive into the financials, not looking at their balance sheet or their income statement, which you should be doing if you're buying individual stocks, figuring out a price you're willing to pay, maybe doing a discounted cash flow analysis or one of the other many ways there are to measure stocks value out there. Again, if you don't like to do that kind of thing or don't know how to, you can still invest into the market. Just stick to ETFs. Find something that tracks the S&P 500. That's what Warren Buffett would recommend. So something like VOO or FXAIX. VOO being an ETF and FXAIX being the index fund that both track the S&P 500. Now, this will be the criteria we are going to look at in this video. It must meet 5 of 8 to make it onto my watch list. And since this is a stock that I do hold, it is kind of a back check of one I am holding to see if it still meets the initial screener as well. All right, back to Verizon. Check them out at their homepage, www.verizon.com. That's www.verizon.com. And you are probably well familiar with this company. They've been around since the 1890s, 1899, way back whenever they were still part of AT&T. Telephones, long distance, way back in the day, the birth of AT&T gives, way to long distance telephone. Bell Telephone is born in 1877. So again, they've been around a long time, Bell system, and then they branched off into their own as well. You can see here they became Bell Atlantic. Then branched off from there. They were one of the first ones out with 4G, tablets, cell phones. They offer business. You can see here some of their services and solutions, Verizon.com, mobile plans. So there's your cell phone, mobile devices. So you can buy your cell phones from them. They provide those as well. Home services. So if you need your internet or your home phone through them, small and medium business, you can run your business cable through them. Enterprise solutions, Verizon Connect, public sector, partner solutions. So they are a communications company that deals with, being able to get online and access your cell phone. That's really what they provide, and some packages for your home entertainment as well. Now, the reason we're taking a look at them, down 5.11% on the day. Did close up the day at $41.44. They are right up against 15% of a 52-week low right now. Let's see. Let's do that math real quick. So 37.59 times 1.15 equals 43.22. So they are within 15% of a 52-week low right now. Anything under $43.22. Now, they do have a 52-week range as low as $37.59, as high as $47.36. So definitely closer to that 52-week low. Well, I don't know, kind of floating right in the middle between that 52-week low and that 52-week high. Market cap of $174.724 billion, a beta of 0.37. So typically they are much less volatile than the overall market, though that's a big drop for the day. Again, we're talking about Verizon Communications, ticker VZ, out of the communications sector. Price to earnings ratio seems pretty low at $9.64 per share. Earnings per share at $4.30. Earnings date coming up here towards the end of the month, October 21st. Forward dividend is $2.76. They are quarterly payers to divide by 4 with a very nice starting dividend yield at 6.36%. Ex-dividend date, October 10th, coming up here. You want to buy them on the 9th or before to get that next dividend locked in. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information, $48.57, which would be a new 52-week high. Jumping over to the right, I'd like to look and see if a company is potentially undervalued by looking at dividend yield theory. Dividend yield theory says if their current dividend yield is higher than their 5-year average, so you look at their 5-year dividend yield average, 5.89%, and it is higher at 6.36%, so that means it's potentially undervalued, at least according to dividend yield theory. Now, payout ratio, I like under 75% for companies like this. They're at 63.02%, so it looks like that dividend is safe. Now, free cash flow, I want growing free cash flow over time because companies can do some things with that free cash flow. They can pay down debt, make acquisitions, reinvest back into the company, carry some of that cash on the balance sheet, pay a dividend, which this company does, and raise that dividend over time. We want a company to be able to do that, so we want growing free cash flow. December 2021 here, you can see negative $28 billion in free cash flow. That is not good. We want them to be positive. 2022 back to positivity, 10.4 billion. 2023, 12.9. 2024, 18.9 trailing 12 months, though that does include part of 2024 numbers since we have 1 quarter left to go in 2025. 19.6 billion. So it does look like steadily growing free cash flow, but let's look at repayment of debt. Doesn't look like they're buying back any shares, or at least that I could see. Repayment of debt, though, and you always want to compare repayment of debt to issuance of debt to make sure they're taking more debt out of the market than they're taking on. So they paid down 18.8 billion, but they took on 41.4. So that's not really issuance of negative. 17.8 they took on, they paid 13.5. 8.6, now they paid 10.6 in 2023, so they did pay more debt down here than they did issuance of debt. Same thing in 2024, they paid down 20 billion, issuance of debt was 15, so they paid down more on their debt than they were issued. And same thing it looks like in the trailing 12 months, 20.6 billion repayment of debt with 13.2 billion issuance. So looks like about 6 point something billion over the trailing 12 months that they've paid down of actual debt. But these years back here, they were taking on more debt than they were paying down, at least till 2022. Now, jumping over to stockanalysis.com, this is another source I go to for information. Not affiliated with stockanalysis.com or Yahoo Finance, just 2 of the sources I go to. I do recommend 2, if not 3 sources for information, so you can make sure the information you are looking at is accurate and up to date. They have 10 analysts over at stockanalysis.com that are taking a look at this. They call it a consensus buy, though it is right on the edge of a hold right there, right just a tick past the edge there, so into the buy territory. Low estimate of $43, currently sits lower than that, so it'd need to come back up to 43 to get that 3.76% increase from where it currently sits. Average estimate of $48.55 would represent a potential 17.16% increase, and if it happened to hit their high of $56, that would represent a 35.14% increase, and you could collect that almost 6.5% dividend yield. Now, jumping into some statistics, I like to look at return on capital employed and earnings per share growth. I like return on capital employed above 10%. They're at 9.85%. Not quite to that 10% or above that I'm looking for, but not far off it either. EPS growth forecasted over the next 5 years. I like 5% or better here. They're at 6.97 with revenue growth forecasted at 2.5%. All right. As I mentioned, I am a shareholder of Verizon. I do have 381.00878 shares. Even with the 5% drop today, I am slightly up 0.62%. My cost basis is what, $41.73, I believe it is. Is that my cost basis? It's currently at $41.44. Yeah, and I'm up. Yeah, I don't know why it shows 41.67, 41.73. That's the range, I believe, for today. I don't know, is my cost basis? It says I'm up 0.62%, but it also says my cost basis is 41.18, which would be lower than the current price there. Something's off here. I need to go look back in my bank account and see what's going on now. All right, quarterly payer, as we mentioned, payout ratio under 75%, 63.31%, dividend growth 1.87%. 20 years of growth. Buyback yield is negative. That means when they are buying back shares, they are actually not pulling more shares out than they're issuing. Now, they hadn't bought back shares in a while, but it does look like they tend to do that from time to time here with a negative buyback yield, 0.1%. Not a large yield, but we want to see that positive. Shareholder yield is positive at 6.36%. They do pay out off schedule, February, May, August, November timeframe. A very high dividend yield starter on this one. Going back to April 6, 2023, they were paying 65 cents and some fractions of a penny. Raised that up October 2023 up to 66 cents and some fractions of a penny. Raised that up October 10th to 0.67, 67 cents and some fraction of a penny. Most recent raise was 69 cents. Dividend growth is slow at 1.87%, but you are getting dividend growth, and you're pairing that with a very high, almost 6.5% dividend yield. And if they were to, pull back into that 30 range, probably closer to a 7% dividend yield. All right, let's run them through the screener here and understand the business. Yes, they are a communication company. They are providing, cell phone, cell service, home service for your phones as well as your internet. They're providing packages for your entertainment. They're a communication company, right? A lot like AT&T. Like T-Mobile, those type of companies. Growing free cash flow, no. I would say they had, because of the debt, I'm not going to give them this. It does look like the free cash flow, if you just look at that outside of debt, then it's growing. But there was the 1 year, if you looked back was it 2 years ago, 3 years ago, where they took on more debt than they paid back. I'm actually not going to give them that, but it's very, very close to growing free cash flow over the last 4 years. Growing dividend, yes, it is slow growth, but still growing. Dividend payout ratio is under 75%, so check there. Dividend yield theory says they are potentially undervalued, so check there. They are within 15% of a 52-week low, under that $43.22. March puts them there. They were to drop back into the 30s. I may even add some to my portfolio. Check there. Return on capital employed was not quite to 10% or above, but just under that at 9.9. Earnings per share growth was over 5%. You get 1, 2, 3, 4, 5, 6, and again, return on capital employed very close to that 10%. 6 out of 8. It is one that I own. It's not really one that I am concerned with. Yes, they are going to be a slow grower, and yes, their dividend growth is not very quickly. But if you want to lock in a very high and, in my opinion, safe dividend yield, this is one to consider, and that's why I have it in my portfolio. All right, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below before you leave, as well as hitting all of those buttons, the thumbs up, the notification. Again, subscribe to the channel. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So let me know down there what you think of Verizon. Is it one you hold? Is it one you're buying more of? Is it one maybe you're looking to open a new position? Or are you part of the 5% downturn today and you are selling out of Verizon? And let me know the reasons for that. We'd love to hear from you. Now, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in the presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.